Welcome back. Hello, everyone, and welcome to Closing Trades right here on ET Now. I'm Avan Dabash, with me, Aisha Faridi, and I say actually welcome back because that's like pretty much the kind of adjectives that we're using to describe the markets. The fact that it's a it's a relentless sideways move that you're seeing on the frontline index, although the benchmarks have mildly outperformed given the fact that you're seeing a cut of about 1/3% within the broader markets. The Nifty is near its 100 EMA. We're taking support at the previous session's lows, and for now it continues to remain a lot of large caps that are languishing under pressure, and that is particularly PSU banks, the likes of Bank of India, UCO. They're continuing to drag their feet in today's trading session. So listless market at hand. Barring that, you've got energy, FMCG that are managing to buck the general trend. But apart from PSU banks, real estate, IT along with media, those are some of the big drags in today's trading session. In fact, the PSU bank continues to drag its feet for many straight trading days on the trot and continues to remain under pressure in today's trading session, 4 straight days on the trot at that. Let's run you through then some of the big losers in today's trading session, and top of the charts is Adani Enterprises, and it's been a few straight days that you've seen that stock in the limelight on the downside. Apollo Hospitals is just about at the 4,500 mark, so losing out about 2.3% in trade. There's Bajaj Auto, Coal India, Ultratech Cement along with HDFC Life, UPL as well as Tech Mahindra in today's trading session that are the big drags. On the flip side though, some green in the form of NTPC. That's the only meaningful mover on the upside, because otherwise the gains are limited to just about 1/3% to 0.5% or so on the likes of Reliance Industries, Britannia, Tata Steel, Tata Consumer as well as Divi's Labs and HUL. So could say that a slight defensive tilt is playing out, Aisha, in trade this afternoon.
Oh yeah, absolutely. PSU banks, they are the ones which are actually seeing a vicious decline, and if we could just bring up all these stocks one by one, that's where you're seeing a massive cool off. So be it a BOB, which is down 3% right now, Can Bank, which is down, City Union Bank, which is also down, and even the smaller ones like a Bank of India, etc., are seeing some very, very vicious moves. SBI too lower by about 0.5%, and PNB as well has fallen near about 1% in trade. Andrew Holland, Naresh Mirani as well as Kunal both are on the show with us to talk about which way the market is headed from here. Kunal, since the index is not doing anything, let me pick up on the point of the banking weakness and especially PSBs. How excruciating could it get before it stabilizes?
I think the selling is not yet over for the PSU banking stocks. At least that is evident when we look at the charts for individual banking names, as well as when we look at the charts for the data for the the private sector and the PSU banking stocks, larger cap names, and especially the ones which are in the F&O category. Because most of the stocks, for example, the likes of Canara Bank, SBI, and such other large cap and mid cap mix, they've come back to their multi-week lows. Some of them are making a multi-month low for themselves, and that generally indicates that the weakness is not yet over. Ideally, when we expect any kind of a stability on the banking index, the mid cap and the smaller cap end of the markets are the ones which tend to get into a recovery phase. But right now, not even the large cap names on the PSU banking stocks are showing any kind of stability as well as recovery. So I believe that could probably be an indication that the selling is not yet over. Maybe it could be a churn or a sector shift which is also happening in the markets right now. For example, the last 5-6 months, particularly the month of September towards the month of December, January, the PSU banking stocks did exceptionally well. Right now is the time where probably the IT stocks, smaller sectors like the auto anch names, they're looking far more attractive. So maybe it could be a phase of sector shifting, sector churning, where from the PSU banking stocks, the money is moving towards the other spaces.
Niresh, is that a view that you would concur with, moving out of the sectoral churn, moving away from PSU banks perhaps to some other sectors?
So in terms of PSU banks, the weightage is pretty low in the indices, so it does not really matter in a big way the flows out there. So if you look at say an HDFC Bank or ICICI Bank, that's almost 45 to 55% of the bank Nifty, and say HDFC Group itself is almost 15-16% of the Nifty. And a stock like SBI only has 3-4% weight as such. So overall, PSU banks although have the most volatility in the markets, but they don't have much weightage or do not make a difference to the indices as such. And that's where the point is, say, even if the PSU banks continue to underperform, it may not create a problem for the Nifty or the Bank Nifty. So overall, the view is we are still stuck in the markets in the same place. we keep seeing flip-flop moves, a little bit of a 100-point bounce, a 100-point back to the same place. Till we don't make a decisive move above 18,000 and sustain for a few days, or below 17,500, 600 for a few days, we are stuck in this band. And keep watching out for this band to shift or some sectoral rotations to come into play. And that is where public sector enterprises look more interesting compared to the public sector PSU banks. As such, if you look at it, NTPC has made a new high for the last 3 months, not far away from an all-time high. Power Grid is not far away from a 3-month high. So overall, the focus should be on PSEs rather than PSU banks.
Right. Okay, let's welcome on board Andrew Holland as well and find out what he's scouting and making of this current market. Andrew, if you look at the index, it seems like nothing's happening, but lots actually happening under that broader umbrella. PSU banks, for instance, Andrew, what explains the sudden bout of weakness?
I think, the whole banking sector's come off in the past few weeks. And I've always said before, and you'll remember this, is that I always think you need to rent the PSU banks rather than own them for a long time. So you're always going to get these big trading rallies in them. And they're great when you're getting that upside. But again, I'd rather kind of think about the larger banks, the private banks and PSU banks at this stage. But again, I think it's just, as one of your guests have just said, it's very rotational. I mean, I'm not sure that very much has changed in thinking over the last 2 to 3 weeks that we last spoke. To change any views in terms of thinking about different sectors or different companies. I mean, I think the only thing that's kind of keeping the market on its toes is a couple of things. Globally, obviously, there's still the debate on interest rates. And we're seeing bond yields spike up again in the US. So that's just keeping people a bit nervous. And of course, the noise around, Adani has not helped. And it continues, from the international press anyway, to kind of be in the more negative side. And maybe that's what's given Reliance a bit of a showcase back in the sun again in terms of, investors and brokers starting to look a lot more closely at what they're doing. Given that they would also represent a large portion of the economy that's growing. So perhaps there's the money flowing into Reliance is because of that. Other than that, there's really nothing that's happened. The budget was just taken in its stride and no real excitement from there after because it coincided with what happened with Adani. So I think it will take a few more months now for the markets to kind of just keep where they are, watch what the Fed is doing. But I'm a great believer that this is first half is going to be difficult for our markets. Then in the second half, as our growth starts to pick up, we'll get a lot more foreign institutional investor interest, and we'll see a lot more flows in the second half of the year.
All right. Meantime, Andrew, just wanted to also get your take as to what the outlook is when it comes to the entire new age tech basket, owing to the fact that now a lot of the companies, even that we've been interacting with, are definitely putting the focus on profitability, something that the market definitely wanted to hear. What would be your take on any of these stocks? Have you bought into any of them recently?
I mean, I can't say what we do, but we recently caught up with the top management of Paytm, and the story they told is one which maybe wasn't kind of understood when it came to the listing, but now they're focused on the core engines of growth, and if they can. Get the money that they're talking about from the banks in terms of loans, and they're getting 4%. It's not a bad business to be in if they can continue to kind of grow that business, and of course the banks will help them grow it as well. So that's the good news. So I think the market likes that. I think the market likes the fact that they're focusing on the core business, and maybe we all got a bit confused at the beginning of some of the other areas they talked about, which are potential growth areas, but weren't the core growth engines of the company. So I think now's again the time to keep looking at these companies. Obviously, the fact that technology in the US has outperformed more recently is helping focus our attention in terms of getting that timing right. Because if and when we expect the Fed to go on hold, that's when I think the growth stocks and technology stocks both globally and in India will start to outperform again.
Okay, let's talk about some of the stocks which are in the news then this afternoon, and let's start off with IEX. Considering that stock is holding up about almost 0.5% or so, it's eased off a little bit from the top of the day, but good amount of volumes traded on the stock. The law to push power plants and imported coal to maximize output. The Power Ministry is now expecting a peak or demand of almost 229 gigawatt in the month of April, and the company has got the CERC approval for high price day ahead of the trading. So that is one stock which is currently in focus. There's of course Marico as well after that City note which has come in. That's another stock which is in focus, still holding up by about almost 2.5% as we speak. Citi says that volume growth acceleration in core brands is going to continue, and they expect a healthy uptick across the business segments, and they do see an improvement in trends across brands like Parachute as well as Saffola, and they expect revenue per earnings growth maybe at the higher end. So that is one stock which is also holding up quite smartly in trade. The other one, of course, is Gujarat Ambuja as well. That's the other one. Gujarat Ambuja Exports is the stock that I'm talking about. That's holding up nearly 2.5% in trade. The deal with the Gujarat government for a project worth about 333 crore rupees is bringing about a fair amount of buoyancy on that particular stock price. So these are a couple of stocks which are in focus. In terms of the market texture, of course, it's the PSBs which are getting hard hit, but NTPC is your big buzzer. Besides that, of course, there's IEX, like I just pointed out. There's Syngene, which is holding up nearly about 3%. There's Astral, which is up 2.5%, and then Bosch is the other one which is also seeing some good gains, holding up 2% as we speak right now. Kunal, ex of L&T, where do you see opportunity in the cap goods space?
So I think Siemens is one stock which we discussed, I think yesterday as well in the Chartbusters today. I was discussing about Siemens, that how the stock has confirmed two big breakouts, 2,900 first and then 3,000, 3,020 as a breakout level. So that's a stock which is looking attractive. Cummins India is also one of the stock which has done reasonably well. The stock was one of the first movers, I think, if I'm not wrong, from late 2022 when it managed to come back towards a life high, breaking past about the major highs for itself and then continued to move up higher. I think last week or so as well, the stock has made a fresh 52-week high for itself, and the last couple of days, the stock is seeing a marginal correction. So I think other than L&T, Siemens as well as Cummins are the two stocks which I'll be bullish on.
All right, let's get those closing picks or trades going in from both of our chartists then. And Naresh, flag off your bet for the day. Naresh, you have to unmute yourself.
That would be a buy on IEX. The stock has seen good volume action today, as well as the stock is finally making a comeback after the steep correction. So the stock was at 300 rupees in 2021, corrected all the way down to 130, 140. Was sideways for the last almost 4 months, made a base around 135 and has now given a breakout. Expecting this to go towards 155 to 170 in the short term.
Right. Naresh, what about, or rather, Kunal, what about your picks?
So I'll go with the buy on IRB Infra, non-FNO stock. Looks attractive on the charts and heading towards a swing breakout just about the 290 plus mark. So would suggest, in fact, would look to buy as well as suggest to buy as well.
All right, time to take a very quick break right here on Closing Trades. Stay with us for more when we return.
Okay, some fresh commentary then coming in from Russian President Vladimir Putin as this week itself you'll have almost a year to the Ukraine-Russia war. And the commentary coming in is not really comforting. Let me just bring out some of those flashes for you on your screens. Putin is actually vowing to continue Ukraine military operation. And after a day's break, you're seeing quite a bit of fall actually for the US futures. So the NASDAQ 100 is now at the session lows. It's dropped in excess of 1% as we speak right now. And the S&P 500 index as well has declined to about almost a 1% fall. That you can see on your screens there, visuals coming in live. Unfortunately, it is in Russian. Without any translation, we would have cut to it otherwise. But for our markets as well, it's been a no-go, although slowly we're drifting lower, still not really testing the session lows, but it's really not moved much right now. Kunal, what's looking like the weakest link in the market, besides, of course, the Adani names, which are, extremely volatile?
So banks is of course one of the
Yeah.
weakest link. Banks, in fact, are the weakest link of the market so far because, had the banks been into a recovery phase, then the market perspective would be completely different because you look at the sector composition other than banks. IT stocks are making a very strong comeback, both the large caps as well as the mid cap end of the market. The smaller sectors like defense, auto stocks, auto anch names, they are making a very strong comeback for themselves. Chemical stocks have made a good comeback, but the only I think the sector which is underperforming and adding to weightage on the indices is the banking index. The other stocks, other sectors like energy index, we discussed last week as well that how the energy index is also getting into recovery. The likes of power stocks are making a comeback. So I think that's the only concern for the markets. And the bigger concern is the private sector names which are unable to lift the charge even at a point when the PSU banking stocks are at the brunt of some selling pressure.
Okay. Moving right on then, wanted to get in a take from you, Andrew, as to what the outlook is when it comes to the entire consumption space, because there does seem to be a bit of a worry that with a lower rainfall or low monsoon that is predicted, that could impact the overall rural outlook. Although a lot of these companies such as HUL continue to maintain that rural will see a healthy growth going down the line. Is this going to be a niggling worry when it comes to FMCG?
I think that's been a niggling worry for some time now, and I think that will continue to kind of have the markets, concerns just over the shorter term. But we still like FMCG. We still think that's the place to be. But again, I've just been traveling and locally, and the number of people traveling is just astonishingly high. And so therefore, this domestic consumption story, particularly for service industries like hotels, and someone showed me what the cost is of booking a hotel room now. Just near the airport here in Mumbai, it's incredible what the hotels are getting away with. So I just think that that's a story I think that's a great story, and I don't think that's going away from us for some time. So going back to the consumption story, yes, FMCG might see a little bit slower growth in the rural parts of the economy, but I think that's already priced in. I think people know it. We've been talking about this for some time, so I'm less worried about that. And again, I'm trying to kind of focus a little bit on what Putin's saying, but these kind of things, I think, whilst it could be rhetoric, it'll just keep the markets on those toes in terms of what he could do in the next few days on the first year of anniversary on the 24th. So I think that will keep the markets a little bit more nervous ahead of that date. And also we got the minutes coming out from the Fed and from the RBI. So we'll see how hawkish some of the people in the committees are compared to what the chairman said and what our RBI people said as well. So those are going to keep the markets a little bit volatile for the next few days at least.
Look at some of the global charts as well. Is the disconnect and the isolation between what the Dow and the S&P doing and what the Nifty and the mid-cap index doing, is that disconnect being maintained or are they converging at some point?
No, the disconnect is in fact very vast because I'll give you an example. The CAC, the last I'd seen, which is the Francis index, that has now come back towards an all-time high level. Now this comes at a point where we already know that how the European nations are already going through a lot of concern for themselves. DAX is now sitting just, I think, few percentage points away from its life high index. I think same is the case with...
FTSE already is.
Yeah, FTSE is already hit that level. The Nasdaq, the index, the stocks within the Nasdaq, the likes of Tesla, etc., these stocks have made a very dramatic comeback for themselves from their, I think, September, October lows. So the composition of stocks, sectors, indices across the globe is completely different than what we have been facing over the last 2 to 3 months of listless kind of a price action. And that's where I believe that the disconnect is. Maybe it's, we can probably put it broadly that it's a mean reversion of what had happened for us in the good part of 2022, especially in the second half, when our markets were more resilient as compared to the underperformance or underperforming zone from the global markets. So right now, maybe there could be some sort of a mean reversion which could be happening broadly.
Yeah, and for now, at least, you've also got the European markets, which are decisively in the red. Of course, you've got the reaction to Putin's live address coming in. And then, of course, the focus is going to be on the Fed that will release its minutes from its latest meeting come tomorrow. So that as well is going to be tracked quite closely. Naresh, let's get in a view on Dishman Carbogen. It is a result reaction, but the stock is up a stellar 15%. And there's Shilpa Medicare as well. That's a buzz in trade.
So both these names have a similarity in terms of the correction which they went through and the volumes which has happened in the last 3-4 sessions. So Dishman Carbogen was around $250 last year in 2021. It went down all the way to sub 90 levels. The stock was at 90 back in June 2020. So that's the kind of correction and price action which happened. In the last few days, we saw a big volume at 90 to 100. It was almost 10 to 15x the volumes. And today we've seen a further volume. And even after this move, it is still back to the prices which it made in last June. So overall, a bottom is in place, but at these prices, the risk reward is not in favor for Dishman Carbogen. Same is the case with Shilpa Medicare. The stock made a peak of almost 650 rupees in 2020-21 and went all the way down to 250. It is closer to the prices of June 2020 where it was. And then it has seen a 15x volume at 250 to 300. So out here also on dips, both these names would be a buy, but not at current prices. So one should wait out for some more correction from this peak and then maybe look at them. But the bottom is in place.
Andrew, after a long time, we have seen the cement sector that has been in the spotlight. After a long hiatus as well, we're seeing a price rise across the board. There have been a lot of cement names within the mid-cap arena as well that have been a buzz off late. Anything that's caught your attention?
No, I mean, obviously the headlines was on the price increases, and let's see if they stick. For the time being, it looks as though it will do. Again, the whole sector got kind of tarred with the same brush in terms of what was happening with the Adani Group. So it was bound to have a bounce at some point. But again, I just think I think to try and just rotate around different sectors is very difficult to do, to make money in the very short term. So I think just stick to the themes. That's what we're doing, and trying not to kind of be too rotational, because you don't know when it's going to turn, as we've seen with the PSU banks. And when it does, it turns pretty quickly. So I think I mentioned a few events this week. We're listening to Putin now, and with the minutes coming out from the Fed and RBI, then I think that'll give us some direction. But I expect a bit more volatility. So it will remain. Volatility will remain there. Expect rotation in the market, which kind of lends itself to where we are right now. Actually, so the market's just doing nothing.
Andrew, great to have you on the show and getting that opinion from you. It's really been a nothing market at an index level, mind you. Lots is happening within that, though. Bandhan Bank is now around 2.5%. BOB has slipped 2.5%. Can Bank is down 3% right now. And then, of course, others like an ABFRL down 5%. Adani Enterprises down 3%. These are the chunk of your laggards. But the market must understand that traditional insurers are not competitors, but facilitators of PB Fintech's business. That's the word coming in from the CEO and the co-founder of the company, Yash Thaya. Stay tuned. That exclusive chat, of course, comes up tomorrow, but here's a short excerpt of that.
See, we're a marketplace.
Yes.
So, and this is where people misunderstand. A lot of people think direct players are competition to us. They're not competition. Almost more than half of our sales come from direct players. Because as a direct player, where do I get volume from? I can get it from Google, I can get it from brand, or I can get it from marketplaces like Policybazaar and Paisabazaar. Now, for the consumer, what's the benefit? He wants a loan. He doesn't care who gives it to him. He wants to know, I want 5 lakh rupee loans for the next 3 years. Who will offer it to me fastest? At what interest rate? And for that, he comes to Paisabazaar. Paisabazaar gives him a choice out of 100 odd partners. That because every customer is a different segment. There's some people who are very well off. They will have pre-approved offers from the top banks. There are some people who cannot get a loan at all. And they would have, you are building a sustainable...
Some riders are there, yeah.
No, you will almost have different kind of offers or very specialized lenders who would be lending to them. So building that entire marketplace and making it work in a commercially sensible way for the suppliers and for itself adds value to both the consumer and the suppliers. And so it has a place out there. Of course, many players will come. And
what is the MDP? What is the MDP? The spreads which you enjoy between...
roughly about 2.5%.
Do you think it could sustain? Because credit card companies which are taking risk of their own capital, they get a 2.5% spread. Here you are not taking any risk.
I'm talking about personal loans.
Okay.
Personal loans is about 2.5%. On credit card, we get an acquisition fee.
Okay, that's about it.
That's it.
Back to closing trades right here on ET Now, and really nothing is happening on the index. Of course, lots within that, within the broader end of the market. That's the one where you're seeing actually the pressure build in. So 131 stocks are standing to the declines right now, with about 61 to the advances. The gains are largely within the power gamut. So anything and everything to do with power, like an IEX as well, holding up 4% right now, in TPC, Power Grid, Torrent Power, Tata Power. These are the only names which are actually holding out in the market. But the rest of it is a big sea of red. And it's actually banks which are really weighing heavy. They are the ones facing the maximum heat right now in the market as we speak right now. Let's also welcome on board then Gurmeet Chadha and find out what he's making of the market so far. Gurmeet, I don't know whether it's a good thing or a bad thing that the index has not gone anywhere in the last couple of trading sessions.
Aisha hasn't gone anywhere for last 14-15 months now. Forget about last couple of trading sessions. And such is the nature of the game. I think if you see market cycles, we've seen long periods of time correction, and this time correction can be a little frustrating because when the index may not show the pain, and as you made the point, there is some serious correction in a lot of pockets in markets, whether it is pharma, whether it is even in tech, especially the mid-cap IT names, or in chemicals, which were once the darling of the market post-COVID period. So I think a lot of things are getting separated now, and there's a lot of action which is happening more at theme and stock level. And markets hate uncertainty. So one uncertainty right now is how many more hikes, right? And we've been debating this for a while. So till the time I think there is absolute clarity on rate hikes by central banks across the globe, mostly US Fed, I also don't see this much improving, at least in the near term.
Okay, let's just bring up that commentary that we heard from Uday Kotak yesterday, saying that he's never seen such fast market cycles before. He's saying that extended rate hike cycle risk may actually hurt asset classes, saying that while India has emerged as one of the stronger nations, buying fuel from Russia at a discount did benefit India. He's saying important for India to be current account surplus. He does expect India to achieve 6% real GDP growth in FY24, saying signs of discretionary slowdown are very much visible, and he does encourage the government to focus on capex spending. Talking specifically about banks, he's saying that NIMs may have peaked out but can be managed, saying that he sees strong banks' credit growth at 1.5 times of nominal GDP. Gurmeet, just want to draw your attention on whether or not banks may have peaked out in terms of a stock market move in the near term.
Look, I don't think so. I think maybe at the broader level, yes, we saw almost every bank rallying, right? And I've said this point that it's when high credit cycles is when you make mistakes. In fact, I was speaking to some product heads in banks where they are now moderating that we have done 20% credit growth, but I think the overall demand remains strong. What has also happened is the valuations are far more reasonable. You don't have any more private sector banks which are 4 or 5 times book value. I think even the expensive ones are more like around 3 book value. And you have Axis, which is, let's say, below 2 book value. We have ICICI Bank, which is roughly about 2.2, 2.3 times, on a forward basis. So I think valuations are reasonable. I see credit demand sustaining. Yes, the deposits will get repriced now because, the loans get repriced earlier. But also, in terms of steadiness of the earning, most banks have very high contingent provisions. You even look at something like ICICI, upwards of 80%. Even SBI is, so all decent large banks are around 75-80% as far as the provisioning goes, which means that there is some cushion on any future credit shocks also. So I think they'll be steady. In fact, I find some value in NBFCs. I think they haven't done as well as the banks, and some of the better ones can actually start doing better.
Yep, and you've also got JP Morgan that's come out with their views on the entire NBFC space. They're bullish on Bajaj Finance with the 9,000 rupee target price. They also like L&T Finance at 11, about 115 rupee target price. And those are the top picks within the entire space, saying that they managed to outperform the Nifty as well as the Nifty Bank. But that aside, then let's just get in a view, Gurmeet, from you, apologies, as to what the outlook is when it comes to metals, because brokerages here as well are turning pretty positive. After a subdued year gone by, do you think it's time for metals to shine?
I think there are two sides of the story, especially on industrials and metals. I'm more bullish on industrials. Metals the moves can be very sharp. Is that either you believe we are in a capex cycle, or you think that it's just early green shoots? I think we are in a long capex cycle, and I would be more constructive on industrials, including cement and capital goods, than over metals. Metals, you want to be more tactical. So we continue to have L&T, Siemens in our coverage. We also like some cement names now. I think you probably will see input costs subsiding. There have been some price hikes now. And the kind of capital outlay the government has on infra and the demand we have on housing, and cement stocks aren't as expensive as they were. You get some better ones at 10, 12 times EV by EBITDA. And with some pricing power coming, I think those look good. Metals, we like ones, specialty steel play, an alloy steel play, which is Mukan, which we discussed earlier, which is more a turnaround story with Bajaj Group now having 74% stake in them. They've retired almost 1,500 crores of debt, and the turnover is now inching towards 6,000 crores. So it's a nice restructuring, turnaround, as well as nice operating and financial leverage playing out.
Price volume breakdown then in Honeywell, that stock is coming under a bit of pressure. Meantime, PVR as well has completely softened out in today's trading session. You've got a Minda Corp as well, which is lower, currently trading at about 197. Rail Vikas Nigam, another case in point, a stock that's lower by about 2% in today's trade. Get in a view then, Kunal, from you on the charts.
So I think Minda, Honeywell Automation, I'll start off with that. The stock has confirmed a breakdown of sorts. The weaker link for the stock is the stock breaking below the 200-day moving average, as well as a slew of major supports for itself just around the 36,500, 37,000 mark. So that would probably bring the near-term charts to be a bit more tricky on the downside for the stock. Would expect that this would be more of a slow, steady, and a gradual correction for Honeywell Automation. PVR could be interesting because the stock seems to be coming back towards a major support zone. In the month of January, the stock had made a low which was sub the 1600 mark. From there, it recovered towards 1700, 1720 levels. So I would believe that possibly this retest towards the 1600 mark could throw in an opportunity for a contra buy on PVR.
Meantime, Naresh, you've been pretty bullish on NTPC, if I'm not mistaken. It's one of the more prominent gainers within the large caps today. Your views?
So NTPC has been the place to hide, as well as where the momentum has been strong. If we look at the current prices, say we are at 173 odd levels, the all-time high for the stock is 183. Add to it, say 4.25 rupees of dividend, which it recently gave. The stock is just a couple of percentage points away from an all-time high. Shorter term, over the last 3 months, the range was around 170 was a resistance zone, which has been crossed. And the next one is 180, but overall the trend is clearly positive. And the next one on the radar could be power grid, which could break out above the 220 mark. And overall, the whole power space, as well as the public sector enterprises space, looks very promising. So one can still look at power grid, NTPC, even at current levels, and even at Tata Power and IEX. So the whole, this is the sector which could be the one that could be breaking out in the near term and looks very interesting.
Gurmeet, taking a look at any of these new age tech companies, Nykaa, PB Fintech, Paytm, etc., considering now they are not just talking profitability, but showing some numbers as well?
Mostly avoid, Aisha. It's not that, I don't like them. It's just that the environment we are in, right? You have high interest rates, they're likely to go further. You will probably get 5% plus on a US short bond today. Which is a no-brainer where a lot of money would go. So anything which is not profitable or likely to get profitable, I think would have very huge swings. We do have Nika PB FinTech in our coverage. PB FinTech in particular had a very decent quarter, almost like 3,000 crores of premiums. Also, their run rate in terms of renewables and fresh business is quite balanced. I also saw increase in disbursement even in Paisa Bazaar, and they are indicating they have shown a roadmap that even Paisa Bazaar should be PAT positive. I don't look at adjusted EBITDA numbers, those can be misleading in FY24. So that's something in our radar, because I think financial products distribution and anything which is more digital does have potential, considering you execute well and keep cost under check. But as of now, nothing which really I would prefer to be safe, conservative right now, and go the textbook way of looking at more growth at reasonable valuations.
Okay, let's just quickly get in some BTST trades as well going before we wind down for the day. Kunal, on your list?
So buy calls on first one is on Reliance Industries. The stock looking, I would say, better than as compared to most of the other large cap names which have been succumbed to selling pressure. But I think at 24, 20, 25 levels looks attractive for another 100 rupees on the upside. 25, 25 as a target for Reliance Industries, and stop loss could be kept at 23.75. And IRB Infra stock, which I discussed earlier as well, I think looks very attractive on the charts, confirming a breakout above the 290 mark. It's moved up speedily towards 300 levels approximately, so would look very attractive for targets of 320, stop loss at 277.
Right, Naresh, your BTST trades?
So that would be buy again on power names. So first is a buy on Tata Power with a stop loss at 204 and a target price of 212. Second is a buy on IEX, which has seen a good price volume action today, closing well also. A stop loss at 140 and a target price of 150.
All right, there you have it. Those are the top closing trades in today's session. But also wanted to just identify then some of the other stocks in news and what the view is on the charts for these counters. Naresh, have you had a look at some of those power stocks like IEX, largely on the back of the fact that there's that law to push the power plants on imported coal in order to maximize their output, and Marico on the back of Citi's positive note?
So IEX is the buy which I've suggested right now. The stock has corrected from 300 levels all the way to 140, and that is where the whole rally started from in 2021. Now, if you look at the last 6 months also, the stock consolidated between 130 to 145. Over the last 2 months also the same. So the base has been made strong at 130, 140. Today it has given a breakout. The last 1 month highs have crossed. Good volumes today. Indicates the bottom is in place, and this could go to 155 to 170 in the short term. And then if it can sustain above 170, that could be a much longer term trend change out here. Marico, on the other hand, has been totally sideways over the last 1.5 year. The stock just continues to be around 500 levels roughly. So not really a bounce back. Could go towards 525, 530 levels, where it could again face a resistance. It's not the trade where you want to participate as such. So IEX is what I like.
Your outlook on Reliance Industries in terms of which part of the business you expect is going to outperform? Is it going to be telecom, which is in a sweet spot, the robust growth that we're seeing in retail or new energy? There are lots of opportunities there, or just, the classic O2C business?
Is to me?
Yeah, Gurmeet, that's for you.
Yeah. So, I think stock has consolidated. If you see now the last quarter EBIT mix, the Geo and retail now almost make up 48%, almost 50% of the EBIT now comes from the new age business. Also, their O2C business, they want to make it net carbon free. They have a clear plan, but that also means that there will be another round of huge capex with their initiatives on clean energy, hydrogen, etc., which is what the street did not like even when they were doing Geo from, let's say, 2014-15 till 2019. I think that's one concern has been free cash flows for Reliance, and again rising debt. So my sense is the big trigger for me is listing of Geo or any monetization of energy business, giving street some sense. That to me is a bigger trigger than granular thing. But as I said, it's a good business. Geo and retail are really shaping up well. Even the OTC is doing well. So overall, the trigger would come, in my view, on any monetization of either through listing of Geo or through any stake sale in the energy business.
Power names, they are the ones which are up. Tata Power, NTPC, JSW Energy, IEX, Adani Power. These are all names which are holding out very well. The government, remember, has invoked an emergency law. They're going to be pushing power plants running on imported coal to maximize output. And the Power Ministry is now expecting a peak demand of 229 gigawatts in the month of April. This is just prepping up for the hot summer, I guess. They do see output maximizing ahead of an unexpected record surge in power usage this summer. According to the report, power plants that use imported coal have not operated at full capacity, and the ministry's notice stated that it does expect all imported coal-based power plants to operate now at full capacity, in addition to selling power to buyers on exchanges as well, which is why you're seeing such a big move on not just some of these pure play power producers, but even IEX. Gurmeet, today, of course, it seems like there is a knee-jerk move in the entire power sector. But if you're looking at any of them from a longer-term perspective.
No, so as I said, Aisha, I think this industrial and energy business is due for some performance. And you know what happens is when we are barely back at pre-COVID levels, right, in terms of economic activity. Once there is an increasing economic activity, a lot of these guys, once they see their PLF and other factors going up, the jump in earnings can be quite substantial, and we've seen that in 2003 to 7. That's why I said you got to be either in the batch which believes that we are in the capex cycle. I think Tata Power looks good to me since we are discussing power and energy stocks. If you see last quarter's very good numbers, held by coal business, held by Mundra operations, and even the revenue to power discom. So very integrated power company. In fact, if you see their green business, which is I say the consolidated green business, which is solar OPC panels as well as the EV charging ecosystem, even that reported like a 140 crore kind of a PAT on a quarterly basis out of the 1,000 crore PAT they did and 15,000 odd crores revenue did. So I think it's a nice integrated power play, old age, new age, right balance, good cash flows. And that's something which we like, and reasonable valuations. Has seen almost a 30% corrections from 300 levels, which we saw a couple of years back.
An interesting 1 month for some of these new age tech companies. Take a look at an FSN e-commerce or a Nykaa. That stock has pumped up about 16% or so. There's been a PB FinTech as well. You heard about that interaction with the management. In the last 1 month, the stock has managed to see a spike up. By the way, right now as well, you're seeing some of these companies as well shoot up. Take a look at the charts of a PB FinTech, 3.5%. And Delivery is the other one as well that's having a good trading session today. And in the last 1 month has put on about 15% or so. Kunal, what are the charts suggesting?
So yes, PB FinTech is something which is looking attractive. Policy Bazaar is something which, in fact, Fino Payment Bank is the other stock which is also looking attractive. Over the last 2 months, it's been holding on to a level above the 200-day moving average broadly. Zomato, and I think that's a stock which has recovered quite smartly from those 50-51 levels to now 54 or 55 plus the last I had seen. So I think that's a stock which again has made a very strong comeback. Looks very attractive because from being a sell on rise kind of a phenomena, these stocks are now seeing more of a buy on dips. Every marginal dip which has been bought into these stocks, even for the charts of Paytm, it's very, very similar. So I believe that these are signs, clear signs that a new trend has emerged for these names, and I would probably expect that this could probably play out very well over the next 1 to 3 months. So would be bullish on few of the new age names, the likes of Zomato, Paytm, as well as Nykaa and Policy Bazaar.
All right, let's then wind up the trading day and goes home as another pretty much listless day of trade. Around the 17,840 mark is where we're circling. And you've got energy, infrastructure to a certain extent that have tried to attempt to pull back, but I think the market's weighed down largely by PSU banks. Fourth straight day on the trot that you're seeing that index come under pressure, and today 2% lower nearly. IT as well being added to that mix. Auto, metals and the broader markets as well continue to remain lackluster in trade. The big drags then, and they include the likes of Adani Enterprises, Coal India, Bajaj Auto and Tata Motors dragging the auto index lower, and then IT, Wipro, HCL Technologies, TCS, Tech Mahindra all in the red, HDFC Life along with Ultratech Cement. On the flip side, NTPC, quite a meaningful gain of about 3%. But other than that, gains limited to about 0.5% to 1% on Britannia, Tata Steel, Reliance Industries, the HDFC Twins, as well as L&T. A few newsmakers in trade, and We highlighted some of those power names, the likes of Tata Power, IEX, the government's emergency power law. There's been Dishman Carbogen that delivered a pretty strong set of numbers, and that stock spikes up in trade. You've got BEML, they've signed an MOU with DMRC-led SPV for Bahrain Metro. JK Tires, it's a fundraise of about 240 crore rupees. And Cummins is on the brokerage radar, a sell rating coming in. And then you had PB Fintech, that stock spiking up quite smartly. Some of the other names within that space as well, within New Age Tech, have managed to hold out. Zensar Tech, Shilpa Medicare, IEX, Symphony, as well as NTPC, Triveni Turbines, those have been some of the smart movers. While Bank of India also comes to selling pressure, ditto with UCO Bank, Can Bank down and out, Adani Green, Total Gas and Transmission in the red, and SpiceJet along with Prestige Estates. Those are some of the other counters that lay low in today's trading session. That pretty much sums up then today's trading day. It was absolutely lackluster, and you've got most of these stocks, most of the high beta plays really that have come under pressure. A mild outperformance when it comes to the frontliners versus what the broader markets have done, with the small cap index ending lower by about 0.5%. The mid cap index goes home with a cut of about 120 odd points. Perhaps some cue is going to emerge from what we get in from the US Fed come tomorrow. But 17,841 is where we wind down the trading day. The breadth skewed in favor mildly of the losing side, though just about even Steven by the time we wrap up the day. Well, on that note then, it's curtains down on this edition of Closing Trades. Thanks for watching.